Hey everybody, hey traders. Happy Sunday. It is 7:30 p.m. Eastern Time on September 8th. Sunday, we are going to kick things off and just want to see how everybody's doing. Take a look at a couple things, get ready for the week, and go through some charts, share a couple of updates on my end. So if you're out there typing a wire, yes, everything's coming through loud and clear. I'm streaming on YouTube and Twitter, Facebook, LinkedIn, I think on Twitch as well, but primarily those are the primary vehicles. And I haven't done a Sunday in a while, but think it's appropriate. So let's have a look. This is the S&P 500. One thing I just wanted to discuss, I mean, usually my charts, I try to keep the price action pretty clean. We were looking for this little bearish breakout. We had this last week. So Tuesday, things started off the month of September with a nice push to the downside. Followed through on Friday. So we had a Monday directional day, Tuesday, Wednesday indecisive, and then Friday directional day. It wouldn't be surprising if we are embarking on a little bit more volatility in the VIX and volatility in the stock market. I don't know if the August 5th low is going to be jeopardized or possibly tested. One thing that just looking at simple technicals here would be this 200 exponential moving average, which is in red. I don't think it would surprise anybody to see this, right? So, Rev, what's happening? Happy Sunday, David. Happy Sunday. Jacob's here, Katrina here, Charles here. Wow, an evening session. Yeah. I want to do a little Sunday evening session just to kind of get things prepped for the week. Helps me, hopefully helps you. Chris, I am doing well, man. Thanks for tuning in. So here's the 200 EMA. And, just let me ask you a question. Does anybody think it'd be a surprise to see the market work its way down towards that 200 exponential moving average? Probably not. This is the SPY. If we test it, that would be a stretch of, let's say, I mean, we're already over 200 bars. I mean, we're in that wheelhouse of anytime the daily time frame gets over 200 bars. Taking a look at some of the indicators here, we have seen the MACD crossover. We've seen the MACD turn red. We still see the RSI in the bottom that has room to continue to go down until we hit oversold conditions. So, absolutely, we could see some additional direction to the downside. Does anyone know what's happening this week in the US as far as news goes? Let me check one thing really quickly. I think we may have some earnings this week, but it's going to be light on that side. Let's go to, let me check my earnings here. Let's go stock twits. And Benji wants to come in and say hi to everybody. Let's check and see what we have for earnings this week. Let's see. So last week, closing prices, S&P down 4.25%, Nasdaq down 5.77%, Russell down 5.69, Dow down 2.93. Take a quick screenshot of that. So these are closing prices from last week right there. S&P, Nasdaq, Russell, and Dow. Nvidia dragged itself lower. We were down to the low 100s. I had a 112 by 113 bear put spread, or bear call spread rather, and collected about 75 cents on the dollar. Ended up making full profit on that, which allowed me to get rid of the bull put spread for 25-cent loss, so a net 50 cents there per contract, which worked out pretty nicely. I had 3 and 5 contracts on that trade. Let's see here. What else we have for calendar? This week we'll go to the calendar. We have 50 stocks reporting earnings this week. There's some notables. I mean, there's a couple I'd like to take a look at. I'm taking another screenshot here. So 50 companies, which is certainly on the lighter side for earnings season. And some notables would include Oracle, if you're kind of in the legacy tech space. What else? Petco, GameStop. Who knows if that's even a thing or relevant anymore? Manchester United, maybe. Big Lots, Dollar Tree took a huge fall over the last week or so. It was down like 22% last week or the last 2 weeks. Kroger, just a typical like consumer defensive, grocery staples. Does Kroger have, super tight margins? If so, what's the consumer looking like for Kroger? Kroger is different. Like Kroger, Albertsons, certainly different than like a Walmart. And a Costco. I mean, Costco has like brand loyalty and they obviously have their Kirkland signature stuff. Walmart has everything else in the store and they're actually taking like little to no margin, even losses on groceries, but more and more shoppers and revenue for Walmart being one of the biggest revenue generators in the world. Adobe, tech space, that's also an AI play as well. That's really all I see. I may or may not take some earnings plays. It was a bit more difficult to take some earnings plays these last couple of weeks. One of my, kind of core strategies during earnings is to just do in the money credit spreads, and it's really cost effective. But I ran into just an inconvenience. It's not a big deal. It's just inconvenient when I can't get filled to exercise my position. So this happened on CrowdStrike. This happened on Lululemon. It didn't happen on Nvidia. I was able to close that one out just fine. But there's also like tons of liquidity in Nvidia. But basically, what it means is I do this. Um, Charles, how are you, man? Nice to see you. Fred announcement. It's not this week. That's actually the 18th. This week is going to be inflation news. Tuesday, Wednesday, we have inflation news. I believe it's Tuesday, Wednesday. It's CPI and PPI. Chris says September has been a historically bad month for trading. It has been. So let's talk about that. I did post a video. I think I did a video Saturday morning and posted that on Twitter and on YouTube. Also, there's links to that in my Discord channel. But I found it interesting. So I've had 3 different readings for September. So September historically. So I've seen a 10-year average of around minus 0.9%. I've seen a 70-year average of around 0.72%. And just this weekend, I follow this guy out there, Charlie Bolello. He does a lot of stuff with creative planning, wealth management office, and he's got some really good data. He uses Y charts. I've known him from Y charts for like the last 10 plus years. But there was I want to say like almost a 90-year, almost like a 80 to 90-year average. And if you have an 80 to 90-year average, it was over 1%. It was like 1 to 1.2% to the downside. So historically, it's like the only month that is averaging bearishness and averaging negative performance. But obviously, being down fractions of 1% or 1 to 2% is a bit different than dropping, quickly 4.5 to 5% right out of the gates. And that's what last week was. So like I said, I mean, remember, this is the entire month of September. So we could certainly be, on the heels and the market does drop, let's say 7-8%. We maybe connect the lows in this area, find that 200 moving average, and then the market finds a bid right back down near these August lows, that August 5th bottom. I don't think anyone would be surprised, and it doesn't mean that catching a bid here means we're going to all-time highs. It could, but I just think it's an opportunity to generate some income. I mean, for me, I put an income plan last week right at current price with the SPX. I did a 5410 by 5405. Grab $2.05 of credit. I'm risking $2.95 of risk. But if I'm right, it's a little income play for Friday. If I'm wrong, then I'll probably wait for a test of this 200 EMA and probably double my contract size. So I do 1 contract here, 2 contracts here, and just do something at the money and kind of collect the same amount. So if I can get another $2, $2.05, maybe go even a strike in the money and try to get 215, 225. But just, I could lose 295, turn back and then win, $4 to $5 on a contract and make up for it and walk away with some income. So I'm watching my levels. That's really it, right? But historically, September is a bad month for stocks, and we're certainly seeing that, and it's just no different seasonality wise right now. Looking at the 200 EMA, it's pretty simple. It's right there. It's certainly gettable. Take a look at the futures feed this morning or this evening. It opened up at 6 p.m. Eastern time. Futures feed right now is just showing a little bit of green. On the bullish side, Friday's move was pretty inefficient. It was an aggressive bearish candle, so I wouldn't be surprised we see a little bit of chop going into Monday's trading. The market's ability to kind of rise back up and find that level around my level looks like around 54.90 would pull back and find that candle, similar to what we did right here on that Tuesday breakout. We had a nice clean Tuesday breakout, so we break, we retest. We have a little quiet day on Thursday. It was a shorter trading week because of Labor Day, and then Friday was a big decisional day to the downside. But if we start out here, maybe indecision on Monday, maybe with inflation data Tuesday, Wednesday, gives the market a little bit of an optimistic push, especially if we see, and that's what I want to point to this week for news, if we see that the inflation readings do actually improve. So here's high impact news for the week. The big ones that I'm paying attention to is actually Wednesday and Thursday. Corp CPI month over month and year over year for the U.S. The forecast right here, this would be a pretty substantial chunk out of the U.S. inflation to go from a 2.9, which was sub 3, to now a 2.6, which is again going to reiterate the the inflation trend is heading in the right direction. The Fed is probably going to have to deal with and is dealing with a 2 to 3% inflation rate in the U.S. If it gets problematic, it's going to be back above 3%. If it stays the course and continues to trend lower with this economic slowdown, then it continues to trend lower. We see a 2.6, and the next month it prints at 2.5 or 2.4, and we're creeping up into that 2% level. But that's one big number that we're going to be seeing on Wednesday morning. Don't be surprised if Wednesday morning the market jumps a little bit early on in futures with that 8:30 print. We'll see what opening bell gives us, good or bad. But then Thursday we have ECB. Holy shnikes, this is kind of wild. ECB expecting to make a massive cut there. Wow, that'd be a 0.6% drop by the ECB. This hasn't necessarily been priced in, because we have not seen a stronger, or I should say in this case, we haven't seen a weaker euro. That would be a big, big, big bite out of the strength of the euro. That could definitely bring the euro dollar back down. That could bring the dollar index higher. I did not see that last week, so that's a pretty substantial cut if the ECB does go ahead and follow through and then justifies it with some type of policy statement and press conference from the Christine Lagarde, whether that's 8:15 or 8:30 or 8:45 with that live press conference. Why would the ECB go 0.6%? And then what? Are they doing 0.6% and then another 0.5, another 0.25? Are they going to be done cutting for a while? And this is just a big chunk. This does make everything a little bit more interesting, because if the ECB is cutting by this amount, does this change anything with the Fed, where we keep going back and forth on whether the Fed is going to cut 50 basis points or 25 basis points on September 18th? We go into Thursday's news. It's core PPI and PPI month over month, as well as unemployment claims. Last week the markets pretty much digested terrible news for the U.S. as far as employment goes. I did listen to some interesting podcasts this weekend, and let's go to the 10 and the 2. So the inverted yield curve that we've all been watching. So let's go to this Fed chart here for the 10 and the 2, and then I'm going to zoom in. Let's go here. Let's zoom in a little bit closer. Okay, I'm going to see if I can zoom in there. Okay, so we have disinverted, I guess is the proper term. So we disinverted for the first time since 2022. Now, what I will be watching, this historically is not a good thing for stocks, right? The disinversion basically means this. I thought this was an interesting kind of data point this weekend when I was at the gym, and I don't really listen to music. I listen to freaking financial podcasts. So, but if we go back in time, okay, what this will reflect, anytime that we've seen, this is back into the 70s, anytime that we have seen inverted yield curve is a tightening labor market, and a disinversion is actually a loosening labor market. And you can look at all these points in time. This is late 80s into the 90s. We obviously had our crash in 1987. We get into the 90s. That was one of the greatest decades ever. We had a bit of a last minute heroic effort 1998 with rate cuts that partied 1998, 1999 with the markets making all time highs again. But that led us into this again inverted yield curve, disinverted yield curve, and that led to pretty massive dot-com bubble, and obviously crisis and recession. And then same thing here, 2007, 2008. Disinverted. We've got the Fed cutting rates, and then coming out of that disinversion, yield curves go up. But what I thought was interesting is tracking this relative to inflation, not just monetary policy, but with a combination of inflation and employment. And so what we have noticed is if you tie this in to the unemployment claims, as this has ticked up and gone closer and closer and closer to becoming disinverted, our labor numbers have been worse. We have seen an uptick in unemployment claims. We've seen an uptick in the unemployment rate from 3.4 to 4.3. And then last week it printed, or during non-farm payroll, it printed 4.2. So my point is this: if I zoom in, one thing I think we need to watch, if there's anything left in this bull market, okay, and I'm talking about all stocks, if there's anything left in this bull market, I think it is really important that this turns south and we actually re-invert to the downside. Because if this continues to go higher, I don't know. I mean, again, historically speaking, maybe it's different this time, but you keep hearing that, and it's probably not. Something is going to break, and that's Nobody knows what it is. Okay. If I do all the research and all these very smart wealth management firms and these very smart analysts and macro analysts, nobody predicted COVID would be the thing that broke the market, okay, in 2020. But it was a cyclical change that needed to happen, but it was the event that triggered it. And so we're in the same situation now is all of the signs are there and nobody's going to be surprised to be like, "See, there's a recession. Told you. Look at the stock market. It's going down." But something's going to go on top of it. And maybe that is the election in 2024. Maybe that's a new president to an old president. Maybe it's policy changes and sweeping policy changes. Maybe it's the Democrats sweep the whole thing. Maybe it's Republicans sweep the whole thing. I have no idea. Maybe it's China invading Taiwan. I have no idea. And I'm not going to pretend to know. Okay. But what I'm saying is something will be used as a catalyst to break the markets down. And so, yes, there's opportunities all over the place. There's potential black swan preparation if you want to protect the downside. I'm looking at this week. I mean, I had a trade on the MES, which is the micro E-mini futures. I took a trade right in here. I have my line stacked up. I took profit last week on Friday. So these Friday lows, I got into trade on Monday night, which was futures open back up. It was a typical, 6 p.m. to coming into opening bell Tuesday. And I put in a bear stack with a November 15th expiration, and I did a long put, long put, long put. Well, each one of those contracts were in profit last week, and I went ahead and just took my profit. Now, I could have held longer, and I could sit here and say, like, I'm going to hold it the whole time, but I don't know if we're coming back down to this level. I mean, I put the trade in on Monday night, and by Friday, I was up, $1,500. And it was a nice little income play and a nice little hedge. And what I'll probably do is revisit this trade and maybe look for a better price and then maybe stack a couple more up here. And then also do it on the MES as well as the MNQ. Because if I can do a micro Nasdaq and a micro S&P, and the S&P does in fact fall down towards the 200 EMA, and the Nasdaq falls to the 200 EMA, let's check that chart out here. Maybe I'm onto something, and maybe my little hedge position works out just fine. So here is, let's go to the SPY, which we have not hit the 200 EMA. Here's the ES feed, which we also have not hit the 200 EMA, but you can see that it was close with that August 5th bottom. You go to the Qs did hit the 200 EMA. But I keep looking at the Qs, and I think something along this line where we have a lower high and a higher low. And with the employment data last week, with the inflation data this week, with the Fed coming up next week, I don't know if the market has enough of a catalyst to say it's bad enough to go lower, it's good enough to go higher. So don't be surprised to see the market be volatile, but not necessarily do any crazy damage. So could we see this to this to this to this? Sure. And if that happens, cool. If we come down and we, test this low, is this a bear trap and then the market rips back up here? Possibly. All these situations, if it's like whipsaws and fake outs and bear traps and bull traps, don't be surprised. If you take a look at the indicators here, I mean, look, we have MACD crossing over, MACD histogram growing red. We've seen the downturn here. We do have the RSI that can still sell off into oversold territory like we did back in that August 5th bottom. And so until technically we are, down in this area with maybe showing some divergence on the MACD, showing some oversold conditions on the RSI, I mean, technically there's still room to drop. And maybe we go high, low, lower, high, lower, low, and then we come right back up here, we form a channel, right? There's all sorts of ways this price action could play out. So would I like to be, hedged a little bit more to the downside? Yeah, in the short term, sure. Let's see if we can break these lows. If we do, I'll probably take some hedges off the table. But if we come to this area, I'm probably going to take some income plays to revisit some of these lows and see if we can get a rip up maybe 3, 4, 5% to the upside. So short term, I'm looking to be a little bit more active. Longer term, just stay long term. And long term to me is if you're looking out 2 years, 3 years, 5 years, if we're at a 10% discount or a 20% discount or a 30% discount, I'm going to buy more Qs and buy more SPY and be long-term bullish. And I'm going to use options against those core positions to lower the crap out of my cost basis and try to own the Qs and the SPY as dirt cheap as possible. Because eventually when they get to the highs, if I can shave another 5 to 10% off my cost basis, that increases my bottom line by 5 to 10%. There's alpha for me, right? There's gains for me. Does that make sense? So that's where I'm at. I mean, I like the little hedge plays in their near term. I'd probably go out end of October, maybe early part of November. Post election, see what type of volatility we get. Also, I've been debating in the short term to maybe play a little bit more on the VIX. This is probably not the feed that I want to use the VIX for. So let's go to this chart. Let's go to the VIX feed. So sitting here at 22.37, we're certainly in an elevated environment. We're above 20, 15 to 20 is pretty solid volatility. 20 plus is considered high volatility. 30 plus is considered chaos. And we haven't seen a lot of historical levels above 30 outside of what we had with 2022, which was a bear market. We spent a lot of time between 20 and 35, 20 and 35 over and over again. So volatility can certainly return, but it doesn't necessarily mean that we're full on bearish. We could just have a lot of volatility. If we see the market, making an aggressive retest of those lows and then it goes right back up. Look, we can have big swings like that and volatility can stay elevated. Doesn't necessarily have to spike up to 60 like it did here. Or if you look at VXX, those futures really were right around 35. So there's, I've seen a lot of reports here that this is actually a misquote for the VIX. And that the truth is that VXX, which is a futures based instrument for the VIX, was around 35. And that's more realistic to what we actually saw. And plus, this wasn't even tradable. I mean, I was long the VIX, and I could not have been filled up to $60, $65. The bid ask was way too wide, and I couldn't even trade it during opening bell. So realistically, it would have been, I could have gotten out in the 30s. That would have been the best. But I got out, as it was escalating in the 20s. Doesn't matter. Okay. All right. Chris asked a question here. If the euro cuts make the dollar jump, what do you see with the yen? That's a great question. And honestly, here's one thing I'm going to do with the yen. So let's go to the Nikkei for a moment. So the Japanese yen futures is 6J. Look, it was a the big swing that almost broke the market, right? I mean, over that weekend, August 1st, 2nd, 5th, the yen started to unravel here, mid-July, and it ripped up to the upside, and the yen pairs did their thing. I don't see the yen doing much of anything outside of this. Probably that, highly volatile, but not necessarily doing a lot of directional plays. This is so much of a directional play. This is so much of a directional play. I could see the market just chilling out for a little bit. And I'm not saying that the Japanese yen crosses are untradeable, but I'm saying I'm not thinking that the Japanese yen is going to make any big attempt to break the highs or any big attempt to break the lows. I wouldn't be surprised if the market just chops around. And if I like the area, like take the low, take the high, take that 50% pullback zone, and then just see if that offers up a chance to stay bid and tight stop loss, and you get some decent trades on the end. So to the dollar point, it's like, yeah, the dollar yen. Let's take a look at the dollar yen. Dollar yen, we're at these fresh lows, but guess what? I probably have some oversold conditions on the dollar yen. Okay, take a look. So just simple technicals here. We have a 200 EMA that we're below. We had a fresh low here. Take a look at this. This RSI, boom. And we made a fresh low in price, and we are way divergent on the RSI, right? We're getting a crossover here on the MACD. Our histogram is actually showing the opposite. We made a fresh low here, but a higher low there. So I see a lot of divergence on the dollar yen to show that, what? If we like to buy trade here with a tight stop loss, that probably has room to pull back into these levels. I could see that happening this week. The trick is there's going to be risk on the Japanese yen pairs. I don't love that necessarily. So what I'm doing is I'm picking my battles on 6J. I'm trading credit spreads on that, or trading some risk defined trades with options, and then I'm also choosing to stay long the FXY out to 2026 because that's the Japanese yen, and I don't really care what it does. I think the Japanese yen, if we have a full on recession and risk off trading and a wave of risk off happening in the market, the Japanese yen will very likely get stronger. But there is crazy amounts of radical monetary policy that could come out of the BOJ, and realistically, there's a crazy amount of radical monetary policy that can come out of the U.S. And those are two, pretty well backed economies that have a lot of influence on what these markets do. So, pick your battles on the crosses. I do think dollar yen, based on what I see here technically, testing the low, lots of divergence here. If the bulls can prove, go down to a smaller time frame, bulls prove they want to rip this thing higher. Let me switch back to this chart. Let's go back to the daily here. Let's go back to just a simple price action chart. Let's go down to like a 1 hour time frame. I mean, look at all this nonsense we had here. Look at this like whipsaw for the last couple of hours of trading on Friday. This was 8 a.m. during non-farm. This is 9 a.m., 10 a.m., just crazy volatile. There seems to be a lot of structure right in here that I think a pretty easy trade would be this. If we break above the non-farm high, there's probably room to go up, 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 come back and retest this high. Stop loss can be, maybe halfway between that non-farm candle or below the lows. But there's going to be a lot of, manipulation in there, so just be careful. But I could see the dollar yen holding off of that previous August 5th low and then showing some divergence and getting higher. So I do like that direction. That makes sense, Chris? Then Welch here for CPI this week. Yep, CPI this week is on Wednesday and Thursday. So we'll see what the market brings us on Wednesday, Thursday. This is forecasted to be a pretty big improvement in inflation data. So for this week, I'm taking a little stab at an income play on the SPX and looking to see if we can pull back and find some efficiency on this. Like, this is a big fat candle on Friday. I wouldn't be surprised if we see, maybe the market lingers a little bit lower, but if inflation data proves to be better and coming in at 2.6 or maybe lower, then to me, this area is likely going to hold. I think the market finds a way to rip back up into here. But as I said, watching for that 200 EMA, if the market rips back up here early in the week and then fades the rest of the week, I wouldn't surprise me either. Right now it's like the market is quickly in bear territory. 4.5 to 5.5%. There's clearly power to the bears right now, but this area is what I've been talking about for the last couple of weeks, and I can see a lot of support in here. Okay, so I will be watching all that very carefully. Cool. All right. Any other charts and questions you want to take a look at? I do want to get into a couple things here with some announcements. So a couple of things I'd mentioned. Feel free to type in the chat if you want me to go into a couple of currencies or stocks or whatever you want to take a look at. If I go into my Discord channel here, it's Chris Pulver Trading. If anybody hasn't joined me and you'd like to, type it in the chat. I'll gladly share my Discord link. If you're watching this recording after the fact and you want to get into the Discord, just leave me a comment. I'll send you a link. But I try to keep the Discord very clean, very simple. If you want to come in here and chat to everybody and see me every day, it's right here in free group chat. If you're interested in chatting Forex, go to Forex. You're interested in chatting stocks, go to stocks. Options, go to options. Futures, go to futures. All my YouTube links like this, I post it in the live link when I go live. My blog, I update virtually every day. I guess I didn't update. Oh, because I put in analysis. If I do a write-up blog, I typically post it here. If I do a video on TradingView and blast it out through my socials, I put it here in analysis. So, you're going to see it pop up with like a fresh print. Okay. WTI can take a look at that rev, sure, no problem. But anyway, so this is my blog and analysis are pretty active. I post a video or some type of update almost every single day. Private instruction, I get emails or not emails, I get messages quite a bit. I do some private instruction here and there in the evenings. Totally great. Affiliate links, all this stuff is changing. Okay. So Edgeful, you've seen me use that dashboard before. They have some really good probabilities in trading stocks, trading gaps, trading earnings. They have some really good probabilities trading futures. It's a really easy, intuitive dashboard to use. You get a lot of great studies and reports to go with it. I've done a couple videos on that to walk through. I had their creator and founder on with me, so there's a couple of supplemental videos to go with that if interested. But I've got a nice little promo on Edgeful. This is Dynamic Trend. This is some really awesome option software that I've used for the last several years. This is my visual roadmap where I'm looking for particular strikes or general direction for the day. There's a gamma squeeze thing that is like unstoppable. If I'm doing any type of long analysis or trying to pick some tops and bottoms intraday, this software package is fantastic. Tasty Trade, you've seen me with their accounts for the last several years. I've got a pretty good connection to Tasty Trade. I'm fortunate I can, email the CEOs at Tasty Trade, Tasty Live, even Tasty FX now. And, my referral code gets you hooked up with some nice commissions, or not commissions, lower commissions, where rather than, $1 a contract or $1.20 a contract, it's reduced to 80 cents or 60 cents. It's entry only, not exit. It's free ETFs. It's free stocks. It's free crypto even. It's a crazy awesome broker as far as like low cost. So anyway, there's some stuff there. And then what else do I have? A1 Trading. I do a lot of live sessions with Trader Nick and the team. So that's Nick Syak, his team, Frank, Elvin. So I work with them. I do a lot of live sessions on YouTube. They got a huge following. It's 3, 4, 500,000 subscribers, and so we go live and we have a lot of fun together. I'm also going to be doing and I don't want to spoil this, but we are going to talk about this week. We are going to be doing some trade signals together. So I believe I can share that. And let me go ahead and update this. So let's go edit message. Okay. And then okay, I'll share that link, and this is follow my trades in stocks, ETFs, options, futures, forex, crypto. I'm going full service suite. I trade everything that I can. I think it's a great way for me to be diversified. Some of it's way more simplistic. Of look, I'm just going to dollar cost average into Bitcoin. I'm going to invest in the Swiss pairs again in the forex market. I'm going to pick a couple of trades here and there, but I'm going to be way more active on 30-minute charts and 1-hour charts and picking my alignments with 4-hour, 1-hour, 30-minute charts, finding some good forex structure trades, supply and demand trades. Futures market, I've been trading a lot more. I mean, look, if futures, I mean, Daniel in my futures section here trades futures every single day. It's probably one of the hottest things for daily trading, intraday trading, scalping futures market, whether it's NQ, ES, MNQ, MES. There is plenty of opportunity, but again, trade a paper account first if you're not familiar with futures. I don't day trade necessarily. I will grab some here and there, but my forte in futures is hedging, income plays. Like I trade a lot of options in the futures market. So because it's a futures instrument, I will still send out options based futures trades. Options, I trade tons of options. So whether it's an income generator, whether it's long term, whether it's short term, lots of options all the time. ETFs, the primary ones. I'm also incorporating some like SVXY. There's also some derivatives that you can trade with the S&P to make it a little bit cheaper. And then stocks, it depends. I mean, I don't love to own stocks, but there are some that I'd be willing to say, okay, here's level 1, here's level 2, here's dollar cost averaging, going long, and then use options to lower the cost basis. So let me find a link for that. I'll put this in here. I'm just going to update this stuff, and give me one moment, and I'll add this in. So let's go A1. There we go. Okay, so this should be the link right there. So if I click on this, let me go ahead and enter that. And I think I have a thumbnail to go with it. But let's see if this works. Give me this. Give me this. Move this around a little bit. That's not it. Hang on one second. I will find it. But I'm going to update this with a little thumbnail. There we go. Okay, so we got that guy, and then I'll put this back in Discord. All right, so here, there, and then see if I can paste that image. Copy. Or is this not? Hang on, this might be a weird file. PNG. Yeah, come on, man. There we go. All right, and then Pulver alerts. Boom. All right, see if we can get this in here. So that's good. So there's the link. And let me edit this message and see if I can throw in that file. All right, it doesn't want to work. It's okay. So there's the link though. So Edge Finder promo, if you see me use the AI dashboard that they have, and then alerts and signal service, you want to follow some of the trading that I'm doing. It's all right there. Check it out. If you have any questions, let me know. And then also, I will be doing a launch tomorrow. I've got a link for that right here. Just give me a moment. And that is going to be this guy. So down here, so I'm doing a full strategy launch, live sessions daily. I'll take the trades every single day with you. What we're doing day in, day out, what instruments we're trading, what I like, how I set it up. If there's any discretion in the trade, usually it's pretty simple. It's pretty mechanical. I love to do this trade every single day. It has a super high win rate. I traded expecting to win. So yeah, there's something if you want to get involved there. And there's a link. So just a couple extra things that I'm sharing. Feel free to check those out in the I suppose I could put those in education. I might just merge those because I did mix this all up. So like education here, check out the affiliate links. I'm going to actually update this. Let's go. Well, I'll do this later. I'm going to change this up to education. So I've got my $100 challenge. I've got the signal services here, and all of you are welcome to jump on board and follow me. And I appreciate everyone that's followed me over the years. And this is the new normal for me. Daniel says it's a beast day trading, especially NQ can very. I know it can. In fact, it's funny you say that because last week on this would have been Tuesday or actually Wednesday. Let me go to the NQ on. So here's the NQ feed. Let me go down to like a 5-minute chart. It was pretty wild on. I was in the office on Wednesday. Here's a 5-minute chart. Was this it? That's Friday. That's non-farm. Oh, it was in this nonsense? Where the heck was it? Here's Thursday. This guy right in here. I know, look, after the fact, it seems like nothing, but right in here during the morning. So I got long on NQ. I got long right here in NQ. This little flash to the downside that tested these lows, I was down like $500, just like that. And this thing snapped back up and I was back to break even. I just let it marinate and then I ended up grabbing about $250 of profit and I got the heck out. It can be very volatile. If you're doing an MNQ or NQ, it's costly. Like I was doing an MNQ, so that's kind of misspeaking here. But I did the MNQ, and that moved down. I was down about $500, and then it came back and I closed out for 250. This is I'm trying to think how many per point is around. It's not $5 a point. Or is it? I think it's like $2 a point. Daniel, what is it? Well, I know that you get like a multiplier of 20 on the NQ, so I think it's a multiplier of 2 on the MNQ, but it is way more volatile. This thing can move, 100 points in a day, easy. Sometimes way more than that. So even from this low to high swing, this was 843 all the way to one. That's a 300-point move in maybe I don't know 30 to 45 minutes. So a lot of volatility on the NQ MNQ feeds compared to ES or MES. So, but again, I'm not condoning dabbling in futures trading or day trading. It is a grind. I see Daniel's posts every single day for the following reason. I mean, he's trading multiple accounts. The guy grinds every freaking day. It's amazing. It's impressive. He even traded on Labor Day when the market wasn't doing anything and scrapped together $500 or $1,000. So what I'm noticing is all of the day-to-day volume and all the, look, I spent a lot of time day trading Forex back in 2007, 2008, 2009. I gravitated away from that. So all this kind of brings up all the bad karma of like, man, there's a reason I moved away from being a day trader. But I love the futures market for a couple of things. You can see lots of day-to-day opportunities. Pick your battles. I love the futures market for proper hedging, income plays. I use a lot of options on it. So to me, it's that like I make it fit with what I trade. I trade a lot of options. I define my risk, and that way I don't have to be as crazy like watching every tick and watching every movement and watch. I don't like to do that. I've got other stuff going on. To me, it's like I like to set it, monitor it, set a couple chart alarms, and I'm just my heart rate is the same. I don't want to be excited. I don't want to be nervous and watching crazy volatility. So futures comes with all of that. You make it what you want. Yeah. So MNQ, unless you're trading at at least 300K on the prop firm accounts, right? And that's the other thing too. Is like in the prop trader world, I've seen a lot of traders gravitating toward the futures market for that reason. You can link up, 2 accounts, 3 accounts, 5 accounts. You place one trade, it clones it in others. Find a way to grind out your 200, 300, $500 a day, $1,000 a day. It's fantastic. I love the success stories, and it is a grind. And I, if I can be helpful and supportive in any way, if we want to talk price action, I've got a couple of levels. I mean, I've got a whole workspace dedicated to how I trade futures intraday. I mean, it's my thing. It's like a weekly VWAP. I see price move away from it, move towards it, use it as support resistance. To me, it's an easy way to get direction. I use my option software as well, where I get a general feed for the day. I get a visual roadmap. So, I'm trying not to fight price and just, lock in on just price action. Although it is crazy good price efficiency. It really is. It's impressive price efficiency. So if you are, wanting pure price action, you're going to see price action, you're going to see manipulation, you're going to see highs and lows getting tested. If you're familiar with all that nonsense that happens in the Forex market, futures is a good way, because you're going to see that happens all the time. And this is all within a pretty tight window. You get into the US session, from 8 a.m., 8:30 a.m. to maybe 11:30 or 12. It's a 2 to 3 hour window that's pretty volatile, offers some good liquidity every single day. So again, I'm kind of going on and on about futures, but it's one of many assets. So, but there's risk involved with anything else, but I do see a lot of good traders that grind it out every day in futures, and they're happy, because it doesn't feel like a full-time job when it's a couple hours a day, but it is a grind. Don't be bothered. Don't be distracted. Risk management is paramount, and just like anything else, but make it your own. Okay. All right. So we can move off of that for a second. Updating Discord, Signal service there. If you're interested, I actually have a webinar tomorrow. If anybody's interested in joining me tomorrow, this webinar right here is going to be at 1 p.m. Eastern time. And I will go live at 1 p.m. and also do an encore at 4 p.m. And then after that, I'm going live every day, Tuesday through Friday for this week. And then after that, I'm going live every day, Monday through Friday. So this to me is a time commitment of getting live every single day, trading right around opening bell with whoever is involved with this course, the strategy, and we're gonna have a lot of fun doing it. So it's a nice way to chat with everybody every day, hopefully make some good money together, and off we go. So check it out. If you have any questions on that, let me know. And that was kind of the announcement side of things for this for tonight. And I want to get that out there because everything's kind of kicking off this week, and I'm pretty excited about it. So the rest of the week will entail, my signals start to go live, my live sessions start to go live. My updates I've been doing on TradingView and Twitter and YouTube, they'll stay the same. Okay. IB's playing manipulation so much. Hedge fundies like, yeah, I know, I get it. There is, and that's another. It's like it's just like anything else. It's going to have its personality. It's going to have its cadence and rhythm that you have to be adjusting to. It's the market, right? I mean, everything has its own behavior where you either find a way to flow with it or you fight it. And for the futures market, I'm not one that loves to fade stuff, but I also, there's a time and a place for it. When we have, an example would be this. Let's say that we have this, crazy inefficiency, and then price is down here, and then I've got a weekly VWAP, and we're way down below it. Well, if we have a big pocket right here, for example, or big inefficiency, sometimes we see the market stabilize and find its way back to that VWAP and find that pocket, and then boom, there's profit. So there's good structure in there. There's easy ways to find trades, and hopefully it happens within a window that you're willing to trade if you want to be that kind of short-term trader. So, but like I said, I would do that with I like this trade. I'm going to do a like a credit spread. Last week I had a really good trade on ES. I traded ES with a butterfly spread, and let me go to that feed right here. Go to the daily time frame. It had a butterfly spread here, which had nothing to do with day trading. I put the trade on Thursday for a butterfly spread down here that was a profit trap, and price fell, got into my peak, actually ended up selling right here at the end of the day Friday, and I turned a $4 debit into a $17 credit, and then I did a $3.50 debit into a $21 credit, and those are huge gains. So, and it was defined risk. Like I couldn't lose more than $4 here, couldn't lose more than $3.50 here, and I turned those into, that's a 300% gain there. That one for 21, that's like a 600% gain there after the debits are subtracted. So, I mean, 300 and 600% gains are freaking sweet. but the timing of it worked out well. I consider myself kind of lucky that it was coming into expiration and settled on Friday, so all good. Okay. All right. Lazarus says, "Hey Chris, good to see you on the weekend. I'm in August for a sell." Yeah, I mean, I've been bearish going into the end of the month and into September. It wasn't a surprise. I traded some bear call spreads up here. So bear call spreads, broken wing butterflies. I took some profit on those already. I had some hedges on MES. I took some profit on that. I'm probably looking this week for a pullback and then look to see if there's more to the downside. We have a 200 EMA that I mentioned early in the session today. That's where I think price is likely going to gravitate. So I don't think it necessarily gets there this week, but just don't be surprised if we are kind of on the struggle bus. We're not necessarily, going full tilt to the downside, and it doesn't necessarily break the August 5th low, but this is in jeopardy, or likely going to be maybe tested. And then this year to the highs, I just think price is going to find a way to go sideways, because what we have to get through is we got through employment news for the U.S. We're getting through inflation this week. Then it's all about the Fed on the 18th. And then after that, it's going to be just another round of employment news, another round of inflation data. And then we're talking election. Like, all this stuff is happening. And I don't know if the markets have enough evidence to really go somewhere directionally prior to the election. So my thoughts are, we come down to these lows, I'm looking to buy for short-term gains. We come up to these highs, I'm probably going to take some defined risk stabs at the upside. Just my outlook for the next maybe 30 to 60 days. Okay, let me grab a couple things here. Pound Aussie, Bitcoin. Okay, sure, Charles, we can do that. And then I do have to jump in a couple minutes, so just to let you know, I'm going to bounce out here in maybe 2 to 5 minutes. So let's do the Pound Aussie. And let me go back to a price action chart here. Let's go Pound Aussie. So Pound Aussie, since we put in this like August 5th top, so we had this like flash crash high on Pound Aussie. To me, this is a spot where I'm looking to fade this move. So I'm not ready just to call it a fade and get in short. It's like, go to a smaller time frame, look for something that's going to roll over to the downside. Once it does, confirm that rollover, stop loss above or stop loss above the highs, and then look to see if we get back down to this structure in here. To me, this is lots of resistance, and we come back down and find target 1, or we come down here to find target 2. So I'm actually looking to go bearish on the Pound Aussie with some confirmation. I don't mind that trade. Then we have the Bitcoin. Okay, Bitcoin, it's just a channel. This yellow box measures symmetry if we're putting on like a 5.0 test. I'm going to go ahead and delete that for right now because it's not necessarily accurate to what we've been doing. To me, this is a accumulation phase for Bitcoin. That's all it is. So accumulation. What I want to see, and I mentioned this, if you watch the video that I posted on YouTube and Twitter this weekend, it was on Saturday. We have a high, we have a lower high. If we have another lower high, lower high, lower high, I don't know what Bitcoin's going to do. But if we see this structure and then all of a sudden this break structure and looks a little bit more bullish, I mean, this is the low, this is the high. This Bitcoin stuff could pull back, 60%, 70%, 80%, like it's done so many times in the past. The average Bitcoin pullback's like 74%. So if it does something along those lines, and then we see a nice break in structure to the upside, I'm going to get long and try to accumulate some positions here and then see if we can get back to all-time highs. That's an awesome gain. We push symmetry. That's an awesome gain. And then we have, all-time highs, which maybe we're talking about that 100K mark and then some, So point is, I'm just going to watch. But right now it's accumulation, and I'm just going to be patient and consider dollar cost averaging. Okay. And then Aussie dollar, that was the last one I saw. I did take a short on the Aussie dollar and worked out pretty nicely. Just shorted it right around that kind of dollar index bottom. And I still see just a lot of resistance and support in here. So we go resistance, we go support-ish in here. Possibly higher lows, possibly lower highs. And I say that because I'm looking for some open space. This to me is nothing's happening on the Aussie dollar outside of volatility. If we get into open space here, that means dollar's weak. There's risk appetite. That's a good thing. Traders, I could see us staying in this market for months and going sideways, and nothing above 68, nothing below 64, and there's no clear direction, and you're just going to get chopped up if you're trying to go anywhere outside of short-term trading. But open space, down or up, that's what I'm going to follow on the Aussie dollar. There's nothing really else to do unless you're short-term trading and getting some structure in there. Okay? All right. I'm going to wrap it up there for tonight. happy Sunday. It's 8:21 p.m. I'm going to jump into another webinar that I do on Sunday nights. Let me know if you have any questions. I'll see you this week. Like I said, I'm just going to update this to be an education piece. I'll probably just swap this out. So this will be education, A1, and my $100 challenge. That's what I'm looking to do essentially every day, Monday through Friday. And so if you want to go live with me, every single day, this is a great way to do it. You want to get some, some live sessions with me when I collaborate with, Trader Nick and the team at A1 Trading. Two great ways to follow me out there, and looking forward to doing both. And however I can help, let me know. Cool. All right, sounds good. Happy Sunday. I'll see you all this week. Stay involved. You can message me if you need me. I'm in the free chat every single day in the Discord group. And if you want to send me a message, that's fine too. But I don't like the direct message crap because a lot of it's like I don't send direct messages for the safety of you and your accounts, and I don't like the DM, so I don't. But this is me. This is my profile in the free group chat. So when you do message me, this is the best way to find me, right? So if you want to send me a direct message, there it is. Easiest way to get me. Don't have some real .Chris.Pulver dash 2 R's one. You know the deal. Like I'm sick of that stuff, and it's taken a while to clean up the channel, but everyone's been pretty vocal about, hey, it's a scammer. I cleanse and purge this membership every week or two. So anyway, just to let you know. Cool. All right. Thanks, Matt. Thanks, David. Thanks, Daniel. Lazarus, you good? Everyone else good? And everyone watching this recording after the fact, happy Sunday. Good to see you whenever you tune in. Awesome. And let me know I can help, and I'll see you.